Well, hello everyone, and welcome to Your Property Potential, the easy to understand podcast for everything home loans and property finance. Now, I'm Hilary, definitely not a property finance expert. We all know that. But luckily, we've got Paul and Ben Williams, father-son mortgage broker duo from Mortgage Choice. Welcome.
Morning, Hilary. Thank you.
Morning, Hilary.
Now, before we get started, we just want to say that this podcast is not financial advice. It doesn't take any unique circumstances into account. So if you are making decisions about your finances, home loan or property, please chat to your own trusted advisors. So today, guys, we've got a really big topic. And in hindsight, I think maybe we went a bit broad because today we're going to be talking about how to save money on your home loan and all the ways that you can do that. So what do you think, Paul? A little bit of a giant topic that we're trying to cover today?
It is actually. It's a really big topic, and it's a big topic, broad topic, and it's topical. It's topical because in Australia, like many parts of the world, interest rates in Australia have risen 13 times through the RBA increases. Not blaming the RBA. The reality is we've got a high inflation environment and the government needs to get inflation down. And one of the things they use is interest rates or monetary policy to reduce inflation.
Yeah.
So looks like we're getting to the end of that hike, if you like. 13 rate rise is a lot. It's a lot, isn't it, when you think about.
And honestly, the other day, I was listening to a podcast, a young mortgage broker who bought about 10, 15 years ago, and she was saying, calm down, everyone. Like, interest rates have been higher, blah, 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 blah. And I was thinking it's actually not about the interest rate. It's about how quickly they rose. Mm-hmm. People were shocked at how quickly their repayments became unaffordable.
Yeah, well, Ben and I talk to people every day, and you know, it's not just the amount they're paying off a loan. It's actually everything else, Hilary. It's just like inflation. It's just going to the petrol bowser and filling up your car. Like, Ben, how much it cost you to fill up your car? Like
at least $180.
Yeah, $180. You know, so stuff like that, and going to the supermarket and things like that. So it's not just the interest rate; it's everything.
It's everything.
But you know what? A mortgage payment can be a third of someone's income, for example. Mm-hmm. And 13 rate rises. So the average home loan in Australia is $500,000, right? So with the 13 rises of 0.25, and some banks do a little bit more than others or a little bit less, but typically that's $1,200 net per month extra in repayments. Yeah. The average person, that's a lot.
That's a lot.
Combined with what we said earlier with inflation.
Yeah.
So that's why this is a really broad and important topic to talk about, and hopefully we're able to provide some guidance for people on how to get their rates down.
I think so.
And hopefully, again, there'll be some good news coming up soon with potential rate reductions for the first time in a while. But to your point, actually, it's an interesting one. I was just reflecting on what you said. So someone who's been around for a while and they say, oh, it's okay, rates have
been higher than this.
Well,
what's everyone complaining
about? That doesn't
about?
help somebody who got a loan 2 years ago,
yeah.
you know, in COVID, and the rate was 1.88% fixed. You know, that doesn't help that person who's only had a mortgage for 2 or 3 years.
Yeah.
So we try to, in our conversations with people, we try and talk about, everyone's different. Some people have had a mortgage for 20 years. Some people have had a mortgage for 1 or 2 years. So we like to individualise those conversations, and also we've got to show a bit of empathy. People are hurting out there. And we do our best to try and educate people and help people with strategies. And hopefully we can talk about those in this podcast for the listeners to learn how they can either do it themselves or talk to a broker and get it done. Well, get the rate down.
Yeah, and I think one thing that I've learnt recently was about the APRA buffer rate. So the Australian Prudential
Regulation
There you
Authority.
go, authority.
You got half right, 50%.
Obviously not a property finance expert.
No, that's okay. It's team effort. So they regulate banks. APRA is our prudential regulator. They actually do a really good job because our banking system's really good in Australia.
It is.
So responsible lending, so not people aren't borrowing too much so that they can't afford to make the repayments. That's important from a regulatory perspective. It's also important that our banks do make a profit. So our lender partners, they've got to make a profit. That's important because they've got to invest in technology and people and things like that. And it costs a bank money to do a loan, to originate a loan. So the regulator says, let's say the rate today is 6.2%, for example, for an owner-occupier loan rate. Then they have to assess people at 3% more than the rate.
Yeah.
So that's 9.2.
So if I get a loan, interest rate, and I apply, and the banks were looking at that, and let's say I've got a 6% interest rate on the loan that I'm applying for, they have to, according to APRA, they have to make sure that my income can cover repayments and living costs at 9%, so plus 3%.
That's correct.
Right.
That's correct, although there are some exceptions, and luckily as brokers we've got access to lenders who don't have that same buffer because they're non-APRA regulated, but by and large that is the case. But the good news recently, Hilary, is that the regulator said to banks, for refinances, you can use a 1% buffer, but there are some criteria around that, like have they made their payments on time, and is the loan to value ratio under 80%, so they've got more than 20% equity, good conduct, principal and interest repayments, things like that. So there are some criteria around it, but it's actually been really good. Because some people, what nobody wants, the government, the regulators, the banks, people to get stuck in mortgages. Happen a lot in the UK. Don't want people to get stuck in mortgages. So now there's quite a few lenders that allow people to only have a 1% buffer. So people who thought they couldn't refinance actually can.
That's great.
So that's why we say talk to us about that and we can find a solution.
So, well, let's go into fixed rates, because I feel like I've heard so many people say that they rolled off their fixed rate years ago or a year ago, and they don't know what they're on now, and all of that. And I think that that's really important, because so many people fixed at record low rates, and we got super comfy with record low rates, and then the 2-year or 3-year fixed period came up and they rolled onto their variable rate at their bank, and it was so massive that their repayments kind of double overnight almost. So can you guys, Ben, do you mind talking me through what happens when someone comes off a fixed rate?
So typically, Hilary, they come off their fixed rate. So like you said, they've had the honeymoon period of 1.8 fixed, and then they come off to what's called a standard variable rate, so a revert rate. So the bank will put them on a standard rate. Now what we do is, before they come off the fixed rate, we'll chat to our clients and we'll say, hey, we're going to talk to the bank, we're going to ask them to discount that, give them the best rate possible, and then we'll compare that to other options before you get moved straight to that standard variable rate. Because the standard revert rate's usually a bit higher than what's in the market. So what we do as brokers is we put that to the bank. We say, hey, there's better rates out there. Can you please drop it when they come off fixed? So we do pricing before they come off. Make sure that they're on a good rate and there's not a big shock.
So how long before your fixed rate term's ending should you be chatting to someone about it?
Typically, we sort of start the conversation maybe about 3 months out, because it's not always just let's come off fix and keep the loan the same. A lot of people want to consolidate. They maybe want to release some equity, do some renovations, or they want to consolidate a car loan, HEX debt, whatever it may be. So we start the conversation about 3 months earlier, and then probably about maybe a month out, we sort of know where the rates are at the time in the market, because things change, especially at the moment. We've had 13 rate rises, so things change quite regularly. So yeah, I'd say probably about 3 months out, we start the conversation.
And I think I think last year they were saying, this year they're saying there's about 450,000 fixed rates that are going to roll off. And last year was even more than that, because obviously when you've got record low rates, you're going to fix that so that you have a nice 2-year or whatever period of that fixed rate. So it's still a massive issue. And it's a massive issue because when people come off that and they go onto the bank default rate, they're really putting their bank in control of what they're paying rather than being in control of it themselves.
That's exactly right. And Ben has a really good point. Ben's really good with this. He gets in 90 days early so that you can put the customer and the broker in control.
Yeah.
Now, that's not being derogatory to the bank. It's actually, we work with the banks to ask them, and we'll also talk to our process a bit later on about how we push really hard at having that conversation around what's the best rate you're prepared to offer this customer at the expiration of their fixed rate period. And we'll talk to one of our staff shortly about how we do that. But it's really important to have that conversation, and Ben does it really 90 days before. And also, it's also having that conversation about, I'm on a fixed rate at the moment. I've been paying that exact same amount for the last 2 or 3 years. Now, what's my repayment going to be? Most people have no idea. Some people think it's going to triple. It actually doesn't triple. Even though the rate might be more than double, it doesn't more than double your repayments, because loans are principal and interest repayments. And also what Ben and I do and other brokers is talk about what's the ideal loan term. Is it principal and interest repayments? Is it interest only? There's a whole host of things you've got to talk about to make sure at the end of the day, the borrower, the customer, is comfortable with their next period of repayments. That's so important.
What you don't want is people finishing a fixed term and then not doing anything about it. So what if someone's way past that? What if they've been off their fixed, like they know, I think my fixed rate finished maybe 18 months ago. I have no idea what I'm paying now. Like what do you do? Do you call your bank? What do you do?
Absolutely, you do. Do you know what? It's what you just said is so true in Australia. I don't know
common.
whether it's an Aussie thing. People are pretty apathetic about how much they're paying on their HECS or how much they're paying on their mortgage, or just, I guess, your phone, your phone bills. Well, people are busy.
Yeah.
You don't look at it all the time.
Yeah, and everyone has this massive home loan repayment, so you think, oh, well, I'm like everyone else, and you just don't do anything about it.
Yeah, most people don't know. It's a direct debit, and it's like, so that's why we get on the front foot, prompt the conversation about it. What's the value of your property? What are your objectives? Is this loan still right for you? Is it the right lender? Can we get a better deal elsewhere? What are your circumstances? What are your future plans? And just build a plan around that.
Yeah.
It's not difficult to do. We have 8 or 9 appointments a day where sometimes we're just having 30-minute conversations with people about this topic. Then we set about doing our magic and getting the rate down.
Yeah, perfect. Really, really good. And I think, we said that's a massive issue still. 450,000 loans or something like that are going to be coming to the end of a fixed rate this year. So it's a massive issue. All right, well, let's move on to, actually, this is my favourite because while I'm not a property finance expert, I do have a home loan. So I actually just did this one, and we like to call it, what do you call it? Repricing.
Yeah,
Does everyone call it that?
Let's call it.
Or is it
Yeah,
just
it's
me?
like anything, renegotiating, repricing your home loan rate.
So for the sake of today, we're going to call it repricing because, love it. Okay, so you actually have a special person on your team, Fiona, who does, and I was saying to my husband, and I'll talk about my story in a minute, but I was saying to my husband, geez, Fiona's a bulldog. Turns out she barracks for the Bulldogs.
She does,
but she's a bulldog with the banks and working with them when she knows that they can do better. And I think that's important because they come back to me with a tiny interest rate discount and I go, oh, that sounds good. But she knows that they can do better in that market. So let's give her a call. What do you reckon?
Let's call Fiona and hopefully she answers.
Let's have a chat about refinancing.
I'll put her on speaker.
Yeah.
So hopefully.
Hi, Paul.
Oh, hello, Fiona.
So we're calling from a podcast recording. How are you?
Good morning. I'm good. How are you?
Good, thanks. Listen, we were just talking about repricing and we thought we might give you a call because you recently helped me out with a reprice on my home loan. But first, I just want to ask what you do for clients day in, day out. So what do you do from a repricing perspective? And how is it part of your internal process when you're reviewing a loan?
Yeah, so we will review loans annually. Sometimes we can review them a bit sooner than that. And initially we'll go to the lender first, obviously ask them to, reprice the loan, get a better rate for the client. And once we've done that, we'll go back to the client and say, this is the offer that we've got. If it's not something that we think is great, then we will look at whatever else we've got in the market. And, we'll see if it's something that we can beat with another lender.
Yeah, I love that. And I think, so if we kind of segue into my own home loan story, it was at the start of the year and Al said, my husband Al said, we've been paying our home loan off for 3 years and we've barely paid anything off. And I said, right, I'm going to get Fiona onto this. So I emailed you and I said, Fiona, oh my God, please help me. We need to see if our lender will give us a discount. And I even said to you, I'm happy because we gutted the property and basically rebuilt the inside. I said, I'm happy for someone in person to come through and do a valuation because I really believe the value of the property will have lifted so much after our renovation. And what did you sent off for a desktop? You said, great, but let's look at a desktop valuation first. What is that? I know that you said it to me, didn't ask the question at the time, but can you talk us through what a desktop valuation is and what an in-person valuation is?
Yeah, so when we do request a valuation, we can request one of two. So yeah, either the desktop valuation or we can get it to be upgraded to a full valuation. So a desktop valuation is where someone will sit on a computer, have a look at some comparable sales in that area for something similar to your property. So similar to a 3-bedroom, 2-bathroom, same sort of land size. Sometimes they can come back what we'd like them to come back at. That's where we then can upgrade it to a full valuation where a physical person will come out, they'll walk through the property, they'll go through all the bedrooms, take photos, and then they'll go back and sort of do their own valuation. And look, they can come back better. Sometimes they can come back not as great, but we have the two options. And yeah, we send that off to the lender. That can also help with pricing. If your property has increased in value, which, trend in market the last couple of years, property has increased. So it's likely that someone that may have been at 80% LVR back 12 months ago, they might now be at 70%. So that then comes back and is in their favour to get a better rate with their home loan.
So that's actually what happened with mine. And it was really cool because in the, because you're paying all these repayments off. It still hurts when you haven't actually made a dent in your home loan. So we went up from 950, I think, to 1.2, which is massive and absolutely ridiculous, from the desktop valuation. So they hadn't even seen the reno. Seeing the original house, you would not know 1.2, but that's what the market has said. So Fiona, that dropped our loan to value ratio, which is the amount of our loan versus the value of the property, down to below 50%, which is the lowest, you were saying?
Yeah, so they will tier their pricing. So every bank is different, but CBA in this instance did tier their pricing. So anything under 50%, and then it goes 50 to 60% LVR, 60 to 70, 70 to 80, and over 80. So we were able to get quite a big discount for you, given that you were such a low LVR, which is very favourable for the bank.
And obviously, I think if you've got your loan and then you get your LVR back and your property has gone up in value and it's dropped a bit, that gives you guys, Paul, great ammunition to go back to the bank and say, hey, for this client, they've dropped down a tier in this loan to value ratio, we want a better rate.
Absolutely. And Fiona's if you don't mind me saying, Fiona, you're like a dog with a bone. She'll just keep going until she gets a result. That she, you got to respect the banks have their rationale for pricing. And as Fiona said, the one of the biggest determinants of an interest rate on a home loan is the loan to value ratio. And Fiona, we could have done a full valuation and they would then more note the improvements you've made, so it would have been higher. But Fiona got to that point where the loan to value ratio was enough to get the best possible discount for you. So I'm really proud of what she's done there.
She did amazing.
She does that for everyone. What I find interesting, and Fiona sees this every day, is sometimes... I had a client with a lot larger mortgage than yours. It was $1 million. She needed $200,000 to do some renovations, some really good ones, and she believed then the property worth a lot more, and rather than moving, they'd renovate. Anyway, 4 valuations later. So the valuations at a residential home in Bayside, Melbourne, ranged from $1 million, lowest, and that $1 million valuation I first did meant she wouldn't be able to release any equity. That was really disappointing. Anyway, I did valuation 2, $1.1 million. Valuation 3, $1.1 million. So these are different banks and different valuation companies. Anyway, we got to the point where we had a conversation. We said, oh, this is like too hard. And I said, no, let's just give it one more try. So we did a 4th valuation, $1.4 million. Now, as it turned out, the rate of that particular lender was a lot cheaper than what she was on. It's just a beautiful story about, and Fiona's really good at this, persevering, because the loan to value ratio is so critical to what determines the rate. Why? It's lower risk for the bank.
Yeah.
Correct.
And that's how banks, and rightly so, they price their loans on what they perceive to be the risk.
Yeah.
And what Fiona said, and all the banks have different policies. Some are below 60%, some are below 80% loan to value ratio.
And that's why it's important not to go straight to one bank,
Correct.
because they've got their own set of rules and regulations. And, you know, I did hear this the other day that often people go to their everyday bank for a home loan only to get declined because they're not a good fit for that bank
Correct.
from a home loan perspective. But I just want to say one thing before we let Fiona go. So Fiona went to my bank with, she's below 50% LVR, da-da-da-da. They came back with a 0.05% discount, right? So to Fiona, and this is why I went to Fiona, because Fiona is a dog with a bone. She called up their retention team and said, absolutely not, you guys must
Fiona
be insane.
is like a dog with a bone.
A dog with a bone.
Not a dog with a
Sorry.
bone, like a dog with a bone. Sorry.
But she called their retention team and got it way down. So I ended up saving about $850 on my home loan a year, which is amazing. Thank you, Fiona.
You're welcome.
And I then went and chucked that on as an extra repayment. And if you go onto your, I don't know if you would know this. I didn't know this, but if you go onto your online banking app, right? And then you click on your home loan, you edit the repayments. Fiona was telling me this. You can play around with, okay, if I increase my repayments by X, I'm going to save 8 years off my home loan.
Yes.
I didn't know you could do that.
Yep.
Most people don't.
I didn't know you could do
It's
that.
nice to share that one,
Yeah.
share that with the listeners as well. And Fiona's really good. She'll always put that and educate people.
Yeah.
Because it's about educating people as well. And she does that with every email she sends as a follow-up, which
Yeah.
is really good service.
So the discount came off my rate that day, like instantly applied. All really good for a day's work, Fiona. Because I emailed her in the morning, and by about 2 o'clock, I had a discount on my home loan. So I was saving money off my home loan within a day. So, and then increasing my repayments, being able to save, I think I saved 8 years off the loan, over the period. So, I mean, when you're looking at a 30-year loan and you're going, geez, 30 years, and bringing it down to 22 or 20, I can't remember what it was.
Yeah.
You're thinking, okay, well, we're getting closer
You
to
are.
it being doable.
Oh, well
you
done.
know?
That's a really good story.
Yeah, oh my gosh, I learnt so much as well. So this only happened about 2 weeks ago, and I learnt so much throughout the process. So I thought I'd share that because Fiona just absolutely hit it out of the park. Amazing, Fiona.
Good stuff,
Thanks, Fiona. Thanks for dialing in.
You're welcome.
Have
Thanks.
a good day.
Bye.
So, Ben,
Yes.
do you have a little story about repricing a client that you could perhaps share? Because one thing I think is important for us, especially after 2 years of cash rate rises and interest rate rises, and people have been scared and worried and all of that, I think it's important to share that other people are in the same position, but also that there is something that they can do about it. So, yeah. Do you want to share a story about some repricing that you've done for a client?
Yeah, I've had a few. Actually, just touching on the valuation point that we were just talking about, with Paul doing 4 different valuations. I had a client who bought at 90% and used their parents as a security guarantee.
Okay.
So they bought their property about 2 years ago. So they're originally at 10% deposit, 90%. They used the guarantee to get under 80%, so they could buy their first property.
Right.
So I did 4
So hang
valuations.
on, their parents' property brought it down to 80% loan to value
Correct.
ratio instead of 90.
Correct.
Okay.
Correct. And then, so he came to me. It's a new client. His parents wanted to sell their place, so it means that he needs to drop the security
Oh.
guarantee. So
Okay.
I originally did a valuation for him. It came back at 88%, which means over 80% he's going to be paying a much higher rate than what he's on now, which is not good. So I did 4 valuations for this guy. Like Paul, they all came back at different amounts, but we got one who did a desktop valuation, who didn't go in and see the property. They did an online valuation, and the valuation came back at 75%. So what that means is he can now reprice his loan. He can drop his parents as guarantor. So now just him and his partner are on the title of the property, no more security guarantee, and he got a much better rate and a cash rebate to refinance to a new bank.
That's an incredible story.
Yeah, and like Paul said before, it doesn't cost you anything to do a valuation.
Yeah.
It's always really good to do, and banks use different valuation firms. It comes back at very different amounts, so it's always an interesting exercise to do. You know, like you said, the rates are different at each LVR band, so it's always worth doing a few. They don't cost you anything. You may as well. But yeah, with free pricing, we've had a few. I had a big one, self-employed couple. They were coming off their fixed rate, and we originally went to the bank. They offered a pretty average rate. I don't want to swear and say it was a right, but it wasn't a good rate. It was, let's just say it was 6.8%, big loan. And we said, no, that's not good enough. In the market, there's better banks at the moment who are offering 6%, which is massive difference. So we got Fiona to go to that bank and say, hey,
Fiona's famous now, by the way.
hey, X bank is offering this. Why are you guys offering them 6.8? And what they did is they dropped the rate and they offered the clients a cash rebate to stay. So those clients got offered $2,000 to stay at their bank, and they got their rate dropped massively to something at market. So repricing is, like you said before, Fiona is like a dog with a bone.
Oh my God.
She gets it done. So it's good.
And it is like, I think the valuation is something that I didn't know about, that could actually help you get a cheaper rate. Like, that's such a big deal that I think people don't understand. And the fact that there's 2 types, and I mean, I'm so glad that we're talking about it. And because I just went through it, because I just kind of learnt all of this, I'm super excited about repricing, and just encouraging everyone who has a home loan and hasn't. How frequently should they be reviewing their home loan, Paul?
Well, Fiona said 12 months, but it's actually less than that, as she said as well, because particularly in a changing rate environment, lenders are changing their policy all the time. Some banks don't allow people to negotiate their rate within 6 months, so they have to wait another 6 months. Some people ring the bank every 3 months, but the banks will say no, every 6 months, mostly. Our view, we're doing them more often now, like every 6 months is probably the right time, especially after all the rises. And now we're coming to a period in Australia where between now and perhaps we might see some rate cuts coming in August. So, you know, I'd probably say, you know, any time's a good time. You know, as brokers, we've got that opportunity. And also the valuations don't cost the client anything to do as well.
Yeah. And so that's a really important.
As we know with yours, you had yours, what did you say? Say 9 in the morning till 2 in the afternoon, you've got a rate reduction, the valuation's done, and your rate discount was applied shortly thereafter. That's pretty damn good. So
it's a good
as
day
often
for me.
as is
Day's
needed.
Work. Thanks, Fiona.
As often as is needed, we're up for it.
It's really good that there is actually some options for relief when it comes to your home loan, and I think people mistake mortgage brokers for being kind of admin loan people, just researchers, but you guys are strategists. You know, you kind of thinking all the options and weighing it all up, which I think is cool. Yeah, and I love the value that mortgage brokers bring to us as an Australian society, because it means that, because it's no cost, it means that everyone in Australia can get access to advice about their home loan, massive cost for their households about their home loan, without having to worry about what it costs. Yeah, it's been great to learn so much through the process of kind of repricing my own home loan. Do you know the best thing about repricing was that there was no paperwork? I didn't have to put any forms in because you guys already had it all. And I could just go, Fiona, please help me get a better deal. And she was on it, and within a day it was done. Like, so good. But listen, we might wrap up part 1. So thanks to everyone for joining us for part 1 on how to save money on your home loan. Join us for part 2 though, because we're going to be covering refinancing, which is a big, massive one. And we're going to be covering a few other little strategies and structure things to do with saving money on your home loan. All right.
Fantastic. Thanks,
Next
Hilary.
time.
Hope
Thanks,
everyone
Hilary.
enjoyed it.